Hello, everyone, and welcome to the Journey to Multifamily Millions. I'm your host, founder and CEO of ZANA Investments, Tim Little. And on today's show, I'm excited to have with us Ahmed Seirafi. Ahmed Seirafi is the principal of Andalusia Development Company, where he oversees all aspects of their acquisition, disposition, and development processes. He has led all facets of the business, spanning more than 100 million in commercial assets, primarily in multifamily and commercial. In its first few years of existence, Ahmed has been instrumental in Andalusia's development pipeline in growing it by 300% to over $400 million. Ahmed, welcome to the show.
Thank you, Tim.
Yeah, so I gave everyone just a high-level overview there of your background, but on this show, we really like to get down to the details of how you got started on your journey to multifamily millions. So please tell us a little bit more about yourself and what brought you into the multifamily space.
Right. Good. Well, Southern California, born and raised. I've been here all my life, just outside of Los Angeles, kind of like on the border of Los Angeles County and Orange County. And I grew up pumping gas. My dad had a gas station, pretty much like every Middle Eastern son or daughter out there. You worked into your parents' business. It was just part of the rite of passage. And I pumped gas for years through high school and all throughout college. And after college, getting ready to graduate, I had a degree in finance with a kind of like a minor in real estate. And one of my professors at the time was a real estate developer, and he guided me into commercial brokerage. So I found myself working for CB Richard Ellis, which is known as CBRE now, as a broker here in Southern California, doing industrial commercial brokerage, right? So I would pretty much be brokering deals on behalf of buyers and sellers and landlords and tenants from small 1,000 square foot warehouse space all the way up to 30 and 50 million industrial deals. So I've been working in that commercial space ever since college. From there, I moved on to brokering on my own for a while. And then I was hired or recruited by a friend of mine to run his commercial contracting company, which I ran for many years. We had a large crew, and we would develop and build and be part of the construction teams of very large civic projects. So, meaning I would be part of the team that built the $150 million high school, or the new culinary center, or the new office building for a school district, or for a city hall renovation. So doing very large civic projects. And then along the way, ever since day one, investing in developing small little projects along the way. And now here I am full circle, where I'm now investing in developing full time and growing that portfolio that was started 18 years ago, and now growing it to a much bigger company and pursuing it full time versus just as a side hustle.
So you talked about your time as a commercial broker, and I'm always interested when you're in that situation, do you come in contact with many investment deals that are taking place? And if so, is there a point where you're like, hey, what? I should be doing this too. Like you see a lot of money changing hands on deals, or were you not quite exposed to that just because of the specific type of deals that you were doing?
I think it depends on your mentality about it. When I was a broker, I was heads down, blinders on, just looking at transacting deals, getting my next commission, growing that pipeline, and doing deal after deal, and growing my client list, growing my commissions, growing myself as a broker. But at the same time, I was not exposed to the ownership or the investor side of the business, right? Because it was not, my mindset was not attuned to that at that time. But now looking back on it, I'm like, wow, there's a lot of opportunity that I have maybe passed over or did not take advantage of as a broker, to get into some of these investment deals and some of these development deals, or to even start my path to a developer many years ago and much earlier in my career. So it all depends on the mindset, which I didn't have at the time, but I definitely do have now, that if you're not looking for it, you're not going to see it. And I wasn't looking for it at the time.
Right. No, that makes a lot of sense. And I mean, a successful broker is not hurting for money anyways, right? Like that's the motivation to get those deals done and to keep doing it over and over. It's kind of akin to house flipping, right? Like the money keeps coming as long as you're doing it, but it is ultimately a job at that point. And I think that's true when we talk about opportunities in general. If we're not in a place to recognize or to take on those opportunities, we don't even realize that they were opportunities until they've already passed us by.
100%. 100%. There is a saying on it, and I'm sure there's a statistic behind it because commercial brokers are really the ones that are teeing up a lot of these deals for the investors and the developers, right? The developers and investors have their own teams, but brokers bring a lot of that opportunity to those guys. And from what I understand and what I know is commercial brokers own or participate in very little of the deals or the transactions that they find. Meaning, if you have 100 commercial brokers, maybe 10, 15 of them have some sort of investment or development in their portfolio of investing and stuff like that. And a majority of them do not.
Yeah, that makes sense. And you talked about your time working with those larger civic projects. I'd be interested to hear one, like what you learned doing that piece and the differences that you see on the commercial side versus like the civic side, if there are differences.
There actually is a lot that you don't see because a lot of it is behind the scenes. And I would say a big part of that would be the accountability portion of it, right? So when you're dealing with a civic project, you're dealing with city, county, state, or federal funds, right? You're dealing with or state departments of whatever may be overseeing the project. You're dealing with local control. You're dealing with a lot of layers of accountability, reporting, as well as construction management and construction oversight on those projects. Just because, not to say it's a bad thing, but government involvement in real estate and development is very intense. There's a lot of layers that you got to manage and you got to work through because there's money, there's accountability, and there's people and shall we say involved when it versus a private development. Say if I was developing an apartment complex, I am accountable to me and the local inspector. That's pretty much it, right? But when it comes to a civic project, there's layers upon layers of accountability, paperwork, reporting, investigations, and inspectors, and things along those lines that are very deep and intensive sometimes.
Yeah, that's interesting. I mean, it's complicated enough on a regular project, especially if you have to do anything associated with permits and stuff like that. I've had to deal with cities and counties getting just even something is getting as simple as getting a permit to consolidate two lots, for example. You would think that would be a relatively quick and painless process. It is none of those things. Things seem to go to like committees with 10 people sitting on these committees for very simple decisions. It's bizarre in some instances, but I understand why a lot of it exists. So I can't imagine the level of accountability oversight when you're actually doing the work for them.
Yeah, the bureaucracy can get pretty intense. Like you're dealing with a local inspector who's inspecting the project. Then all of a sudden you have a state inspector coming down from the capital to say, okay, I'm from the state. I'm here to inspect it too. And the state inspector and the local inspector are at odds about how things should be done. I'm like, well, who's in charge here and who's going to make the final decision? Because the local inspector says things are being built according to plans. And then the state inspector says, well, yes and no, we have a different opinion about that. And it becomes difficult at times.
That's funny. All right. So I want to dive into your current business. And we have a lot of value add investors on the show, and I would put myself in that same category. Can you talk a bit about development and how those deals differ from multifamily, both in terms of their risk profile and their returns?
Yeah. Risk profile is definitely more, right? And it's also slow money, right? It's a slow investment, meaning you may be getting into an investment on day one. And if you're buying a value add multifamily property, I have a few of those myself. If you buy multifamily value add, you can pretty much, once you close escrow, you can start working and recapturing some of your investment and raising rents and doing renovations and things like that. So within a few months from the day you close escrow, you could be a completely different position than you were. With development, it could be anywhere from a 2 to 4 or 5 year process from the time you identify a property and move it through the city and move it through construction and move it through the lease up. Then you're finally recapturing some of that investment money. So it's definitely a much longer term and the risk profile is definitely more because you are taking on that development construction risk. But at the same time, you have the opportunity for a large multiple X on your investment upon completion of that project. So I'm doing a small development right now. So not multifamily, it's commercial. And if you look at it, it's probably about a 24-month process from the time I brought the property to the time I build it and either sell it or lease it. And I'm looking at a 200% or 4x return on my investment, meaning I may be in the project for a couple $100,000, but my profit on that will be 3 to 4x of my investment. So my cash on cash would be at least 4x. My ROI would be 200%. So it depends on how you look at these things, but it is also, I'm taking on that development risk. And so there's a few of the differences, but the main ones are the time that you recapture that investment and then the amount of return on your investment that you get ultimately at the end of the project.
Oh, yeah. Those are certainly some attractive returns. What does it look like in terms of distributions to investors on, but it can vary obviously even within multifamily, depending on how heavy of a lift you have to do on those projects. I've had one project where it was a completely empty. We were doing all the renovation up front. So 0% occupancy. It's going to take a lot longer to get to stabilize so that you can start pushing out those distributions. Other properties, you may be stabilized 90+% occupancy already and could start pushing out those distributions relatively quickly, say 6 months, for example. What does that look like on something where you're just starting off with a patch of dirt?
Yeah. Well, great question. So you can do it in two ways, or at least I look at it in the way that you can go in two avenues or two different directions, right? I am self-funded. I don't take on partners for any of my projects. I will be in the near future because I'm looking to grow and get a larger portfolio and do a lot more. And so by doing that, I'm going to need to bring on some investors. But the two ways of doing it is you can say, hey, Mr. Investor, Mrs. Investor, we're going to do this development. It's going to take us 36 to 48 months from start to finish. Your investment day one will go towards acquisition, construction, development, leasing, and et cetera, et cetera. And then upon lease up and stabilization, we'll refi it and we'll start paying distributions. We'll give you some of your capital back, et cetera, right? So me, they have to get in and they'd have to wait until that project is completed, right? Or you can actually take their investment, Mr. and Mrs. Investor, and say, we're going to underwrite distributions into the construction and the budgeting of this whole project, meaning you give us, you're an accredited investor, you give us 50 or $100,000 minimum, depending on who the sponsor is or who the developer is. And we are going to underwrite returns along the way to give you during this whole process, meaning once we receive our construction loan, we have underwritten investor returns into our pro forma, meaning, hey, maybe every 6 months, we'll give you a certain amount of return on your investment every, and then upon completion, it may be a bump or it may continue on monthly or quarterly after that. So you can do it two ways. Like I said, you can do it just, hey, you got to wait till the end of the project until we're done and they'll stabilize and then you'll start getting your return. Or you can underwrite it into the development pro forma where they start receiving smaller distributions along the way that are a part of the development budget.
Yeah, that's interesting. So you're still able to accommodate those more cash flow focused investors. Yeah, and I think that's key. Just obviously understanding what your investors want, and I'm more than happy to tell someone if the deal doesn't align with what their financial goals are, then hey, maybe this deal isn't for you, but I'd be happy to let you know when we do have one that aligns better with whatever their goals are, be it cash flow or that equity multiple like you talked about, 4x. So especially in a relatively short time frame, if you're talking about 4x in 4 years, that's pretty attractive compared to what we see in a lot of more traditional value add where you're getting say a 2x in a 3 to 5 year hold, give or take.
It depends on the asset, a bit depends on the location, but it is, there is higher risk in the development aspect of it because you are taking on that development risk, that construction risk. But if you're able to get it into it and your leverage you got high leverage and low cash into it, the return could be really appealing upon completion of those constructions.
Yeah, and talking about that risk, have you ever seen that go bad, whether for yourself or someone else, in terms of falling those kind of deals falling through? And if so, what are the triggers for a development deal kind of falling apart?
Well, I have one project right now that maybe I may be cutting ties on and not pursuing anymore because of the economy, because of certain individuals who are related to it. And I do have some money already into that. I think I may have 20 or $30,000 just in legal and professional costs into the project. I haven't even closed escrow on it, and I may just bounce out and cancel escrow, not even pursue it, just because of the change in the economy, the change in the local political situation, the change in the local government, and being able to move that project from start to finish. So there are things along those lines that may happen even before you close escrow and you have to cancel escrow and you're already out 20, 30, 40, $50,000 like I am right now. That may happen this week, right? Or you have other things where you actually buy a property, you close escrow on the piece of land, and you start trying to pursue your development plans and you realize that, hey, what I want to do doesn't really work. The city is not cooperative. The location doesn't lend to what I want to do. I didn't do my due diligence and I made some mistakes along the way of not fully analyzing this opportunity, meaning you may have gotten into a property that you bought and your development is now not feasible because you didn't do your homework from the very beginning or because you went with your gut or with what you was in your heart about what you wanted to do and not what the market demanded. And it's one thing that I teach a lot to whether it's the people who I mentor or my students that when I do my educational side of the business is you cannot ever fall in love with a project, fall in love with a development. Just because it feels good and you think it's going to work and because you have your heart sit on it, et cetera, you can never do that. You must always develop, build, and invest what the market demands and not what you think works, right? Because by doing that, you're protecting yourself a whole lot more. Because I've seen a lot of people do a lot of things, and I'm sure you've seen this in the value out of the rehab, and they start doing a bunch of things that they feel good about. They think it's going to work, and they got their heart set on it, and countertops and colors and materials and this and that, and it's a complete waste of money, right? There's no recapture on the investment because it was purely an emotional decision and not a practical and financial decision.
Yeah, exactly. And I think a lot of newer sponsors, syndicators, whatever you want to call them, get caught in that trap, especially if they're not familiar with different asset classes. So if they're used to A and B and they buy a C class asset, and then they go in there and try to put in quartz countertops
Yeah.
and the technology package and trash valet and every other thing that they were so used to and that tenants probably wanted in those A and B class assets. You're not going to get the money back because you're over renovating. And it might not even be something that tenants at that level want or care to pay more for
Yeah.
in terms of rent. So that's a really good point. And then I think the other piece that happens to a lot of newer investors is just the hunger to get a deal done. And
Yeah.
they get partway into one and they don't want to let it go because they want to close that first deal or whether it's the second deal. And so it almost hurts them more to let it go than the money they're going to lose if
Yeah.
they stay with that deal. So that's certainly something to be weary of for any of those new investors coming
It,
into the game.
it goes back to you're trying to ride a dead horse. It's just not going to happen. You know what I mean? And I think it's the ego. You know what I mean? It's the ego that you got to be able to detach from and say, hey, I got to call it quits. I got to put my hands up. I got to cancel out on this and move on to the next one. And a lot of people, their egos won't allow them to do that. In this business, an ego is good, but an ego could also be really bad.
Yeah, and that risk you talked about, I mean, even yourself with potentially losing $20,000, $30,000 as part of the due diligence and the work that you're doing up front for this stuff. I think a lot of passive investors may not recognize that risk that the operators are taking because they don't see it, right? It's a lot of it is not presented to them, but there's a significant amount of risk and capital put up front, whether that's, like you said, legal fees, the time to do the due diligence, whether they need to travel to these properties. There's a lot of work, time, and money that's going into vetting these deals before it's ever presented to an investor. And so if an investor is going to be like, well, why am I paying this acquisition fee? And why am I paying this asset management fee? I think they just, well, one, it's the responsibility of the syndicator to explain that to them. And those are fair questions if you're new, but I think we need to do a better job maybe of communicating the risk that we are incurring upfront, both financially and the work that goes into it with from a time perspective.
Right.
All right. So I also mentioned at the top of the show that you not only work in the multifamily space, but also commercial. Can you give some examples of what those types of projects look like?
Yeah. So I split my time or my focus between two asset classes, right? So multifamily got currently about 600 units going through aspects of construction and entitlement. One property is moving dirt, another property is going through planning and architectural right now. And the other asset class is small scale industrial buildings, meaning small to medium sized tilt up type warehouse distribution facilities. And here in Southern California, that's a very hot market. It's something I grew up in, it's something that I was always around and a part of being a broker for CB. So I have been going out and looking for these smaller properties that are passed up by most larger or mid to large developers because they want to develop 100, 200, 300,000 square feet of warehouse at a time, whether it's one, two, three, or a million square foot building. And I will go out and find the 1, 2, 3, 4 acre properties that I can acquire and that are in the right areas and develop smaller buildings on those properties because I am a smaller I have less overhead than some of the bigger developers, so that I'm able to get in, develop, and make a profit on the smaller product as well as much as they would do on a larger product. So I've been looking for those types of deals. I currently have somewhere between 4 and 5 small industrial commercial deals right now. I am designing those, and those are anywhere from 5,000 square feet buildings up to 30 or 40,000 square feet of buildings on or between 1 to 3 acres.
And you said most of those are like warehouse type
Yeah.
buildings?
Small little concrete tilt-up buildings that small users, whether it's a small entrepreneur or a small distributor or a small manufacturing type business or somewhere along those lines, that's what these buildings are geared for. Either an owner user who wants to buy their own building and operate out of it, or a smaller business that just needs to lease a small industrial space that roll up doors. It has 24-foot clear heights. It only has 1,000 square feet of warehouse, I mean, of office space, and the remainder is warehouse for them. So these smaller buildings are really in demand because right now, the change in the economy and going to a more of a service-based economy where everything is delivered to you, where everything is presented to you, where you don't have to leave your house for anything anymore. Warehouse distribution type facilities, commercial buildings like these are becoming much more in demand, not only for the larger users like Amazon and Walmart who deliver everything to you, but for the smaller guys who actually service the larger guys or the smaller guys who actually service you directly as well.
Yeah, that makes a lot of sense. And yeah, I mean, especially right now, because like you said, the economy has shifted a bit and the pandemic lifted, people wanted a bunch of stuff.
Yeah.
Uh, they couldn't get enough stuff. And so all these companies started stockpiling and now they're out of room because people aren't buying as much stuff. As you mentioned, they're moving more to the service space, whether it's traveling, going out to a restaurant, etc. And so I know that it's really in demand, but I think when we think about warehouse, we focus on the million square foot Amazon facilities or Target or Walmart, these huge players. So it's interesting that you say that you're filling this niche, which, I hadn't thought of, but completely makes sense. You're going to have businesses at all levels who need to store stuff,
Yeah.
right? And entrepreneurs, especially, They may be scrappy and they have this stuff that they were selling out of their garage, but they need a bigger space because they're starting to overflow.
It could be the guy that imports widgets to his little 10,000 square foot warehouse. And from there, he distributes to Walmart, Amazon, Target, whoever sells his product. Or it could be the guy who has a bunch of service trucks and only goes out and he services the Amazon and the FedEx trucks that deliver things to us every day. Or it could be the guy who manufactures the plastic containers that we get our meal prep delivered to us every week. You know what I mean? It could be any one of those types of businesses because those guys don't need 1 million square feet. They only need 5, 10, 15, 20,000 square feet. And I want to be the guy that provides that type of service or provides that building and provides that asset to them so they can use it.
Yeah, that's smart. Serving that niche that a lot of other players just are not focusing on. So you seem to have scaled pretty quickly. What would you say have been the key factors in that successful growth?
Me, I don't want to, that's not my ego talking. That's just one of the things I'm good at. And I'm good at identifying and executing on good land sites, right? I may not be the best builder. I may not be the best manager. I may not be the best guy at underwriting financial documents and doing that kind of stuff, money management. But I'm really good at identifying sites that can be developed. And I think that's where one of my strengths come in. And by being able to do that, I'm able to see things that other people don't see. I'm able to see opportunities that other people don't see. I'm able to take something that may not be a good opportunity and create something out of it that turns it into a great opportunity. So that's one of my superpowers is identifying good land sites or being able to take a bad land site or bad development option and finding ways of working with it and changing it and putting some time and effort into it to create a really good development opportunity. So I've been able to do that over the last few years of finding these really great development opportunities for really good pricing because I'm able to see things that most people may or may not be able to see, right? But that's just one of my strengths, and I will play on my strengths. And when it comes to other things, I will hire people who are good at it, whether it's a builder, a contractor, architects, engineers, financial planners, managers, project managers, whatever it may be. They're probably much better at it than I am. And I will recognize that and I will employ those people to do that job. But when it comes to land, site selection, and acquisitions and things like that, that's one of my superpowers. And I want to just double down on those.
Yeah, that makes a lot of sense. And I have to imagine that you're having a good eye for opportunity is a result of just the amount of exposure that you've had over this career from your time as a broker into the civic sector and now doing what you're doing. All of that culminates in this knowledge that others wouldn't have because they haven't seen the same number of deals and opportunities that you have specifically within this sector.
100%. Yeah. It's like, and it's paying attention, right? So when you're out driving your neighborhood or driving your territory and pursuing whatever type of real estate you're in, pay attention to what's going on, right? Say, oh, look at that. It's an old piece of dirt that someone is building on it. I never thought anyone would build on it, but let's take a look at what they're building. Oh, that's interesting. Oh, that actually works. Oh, that's a bad idea. That's going to fall. You know what I mean? It's like pay attention to what's going around you, whether it's a development or a rehab or an acquisition or whatever it may be, and pay attention and then learn from it and see what people are doing and see if you can do it better or if they're doing it worse or what have you not. Just learn from it, but pay attention because so many of us, when we're out driving, going from meeting to meeting or project to project or whatever it may be, we look straight. We don't look at what's going on in our neighborhoods and in our own communities about what's changing. And that could be one of the greatest educators out there is just by paying attention to what other people are doing.
Yeah, you're absolutely right. It starts in your own backyard, right? And whether that's single family housing, they always tell you, look in your own backyard first, drive for dollars, all those cliche terms, but there's some truth in it in that go for what you know best. You know your block, your neighborhood, your state. Look around, see where the opportunities are and go from there. And it sounds like you've really doubled down on that, especially with that experience and bringing it to bear to make it very lucrative for you.
There's properties around me that I won't touch because I'm not I don't think they're a good opportunity or it's a good layout or it's a good site, but other people will, right? And if they can be successful at it, great. But when they do pursue those opportunities, I'm going to be watching them to see what they did because they may have seen something that I didn't see. And when they go through their construction of their development, I'll be learning with them, right? They are educating me for free. So I definitely pay attention to all those things that are going up around me.
Yeah, absolutely. That's good advice. All right, this has been great conversation, but right now it's time to move into the turbo round. All right, so I'm going to ask you three questions that I ask all my guests, and I want you to give a quick, honest answer to each one of them. The first one: what is one red flag every investor should look out for? And that can be either a passive investor or an active investor.
One red flag would be somebody who is too enthusiastic about closing a deal and getting the capital quickly, right? Meaning they're not in control, they are rushing into judgment, they may have not have done all of their due diligence. So someone who's pushing you quickly and pushing you quickly to close a deal or to wire your funds or to buy something, that may be a red flag.
Yeah, that makes sense. I mean, the timing is a real thing, and there's always deadlines, but at the same time, they shouldn't come off as frantic or desperate. That's certainly a red flag. All right, what is a myth about this business that you would like to set straight?
It's not impossible. It's not too big, right? So if you're looking at buying a 4-unit apartment building and you're underwriting it and you're looking at all the numbers, there's really not much difference than underwriting a 500-unit apartment building. It will still, numbers don't lie, rents don't lie, operations don't lie. So whether it's 4 units or 500 units, the work is still going to be the same. So if you want to scale and grow into that number, you can do it. It's not impossible. It's just, you got to do the same amount of work, just on a larger scale.
You're right, but it's one of those things that's hard for people to accept. I think I was probably in the same boat. Like, oh, it's do the same amount of work, like you said, buy a 4-unit as you do a 40-unit, and I was like, there's no way that's possible until you do it, and you're like, oh, okay.
It's the same amount. It's the same work, maybe just a little bit more of it, but it's the same work.
Right, exactly. All right, and the final question: what does success look like to you?
Doing what I want, where I want, how I want, whenever I want. And that could be vacations and charity and family and just doing what I want whenever I want. And a lot of that is development. So if I'm able to develop and do it when I want, how I want, where I want, to me, that's success, because I like building, I like putting things together, I like taking something from nothing to completion. And that to me is success, because if you're good at it and you enjoy it, the money will automatically follow you.
Yeah, that's great. A lot. We hear that from a lot of guests. The time freedom, financial freedom, sure, but if you don't have control of your own time, then you can't engage in the things that are important to you, right?
100%.
All right, Ahmed, this has been great. I love the conversation that we had today. Please tell our guests how they can get a hold of you, and if you have anything else that you would like to share with them.
Easiest way is to follow me on Instagram. I'm very active on that. You're able to connect with me there. You're able to get redirected to my website or other things along that way. But to find me on Instagram, it's Ahmed Builds Better. I'm on Instagram every day. I'm always sharing and showing best practices and other things along the way that can help people along their real estate journey as well.
Oh, well, awesome. I'm certainly going to hop on Insta later and look you up, and we'll have all that information for our guests in the show notes. I appreciate you coming on, and I look forward to seeing you do big things on your journey to multifamily millions.
Thank you, Jim. Appreciate you.